Hi everyone, this is your 10-minute daily business and finance news wrap. I'm Ricardo Gonçalves for this Monday, the 15th of February 2021. Later, Richard Murray, the CEO of JB Hi-Fi, on the profit numbers and, more interestingly for the consumer, the hardest electrical goods to get your hands on right now. But first, let's go to some other bank profit numbers. The Bendio and Adelaide Bank, its half-year cash profit came in up around about 2% to $219.7 million. And astonishingly, home lending up 14%. So for more on that, I spoke earlier with its CEO, Marnie Baker. Marnie, Bendio and Adelaide Bank is Australia's fifth largest bank. To what extent are you growing market share?
Well, we've seen good market share growth over the last the last four halves. It's coming as a result of the above system lending growth that we're seeing across our portfolio, but especially in our residential lending.
Are you seeing differences in the way regional and city customers are handling the financial pressures of the pandemic and how they're climbing out of it?
Yeah, well, in some sense, in the regions it hit a little harder, but in a recovery sense, we're seeing the regions perhaps recover quicker. If I look at some of the stats that are coming out now, and the ABS, they talked about the migration that you're seeing, from cities into regional areas, and in the July through to September period, it was a net migration of 11,200 people. Now, for a decade now, we've seen a net migration into the regional areas, but I think COVID has, absolutely accelerated that. But you're also, when we look at the Regional Australia Institute, they did some research around job vacancies, and there's 54,000 job vacancies in regional Australia.
Now, speaking of property, based with what you're seeing with mortgage deferrals and commercial support packages, do you think Australia is well placed to come off JobKeeper at the end of next month?
Yeah, look, we're not out of the woods yet. Whilst the economic indicators are showing some encouraging recovery, or some signs of recovery, there is still some way to go. I heard before the vaccines landed here, so that's really pleasing news, but it's going to take some time for those vaccinations to sort of roll through, through to the population. So, I'm sitting here in Victoria, in regional Victoria, and 48 hours or so ago, wouldn't have foreseen this 5-day lockdown that we're in at the moment. So we are going to have to learn how to live in a COVID world, live, operate, and run businesses in a COVID world. But we're not out of the woods yet. And the stimulus, getting back to your question, Ricardo, the stimulus itself, stimulus has, in relation to the JobKeeper, it has to come to an end at some point in time. So I can understand that. With JobSeeker, there was always a concern prior to COVID that Newstart itself perhaps wasn't at the right level that it should have been to support those probably, sometimes more vulnerable people and unemployed people. We would be supporting, looking at the level of JobSeeker going forward, and I know the government is doing that to make sure that it continues to support the health, of our economy, and the health of people who are on JobSeeker.
And just finally, I'd love a brief comment on diversity, as at the end of 2020, you're just one of 10 females as a CEO on the ASX 200. Does that disappoint you? And how do we change that?
Yeah, I think we're only one of two as well that has a female CEO and a female chair. The fact that it's so small, the number of female CEOs heading up ASX listed companies is a concern. I would have thought that, it would have changed a lot quicker than what we actually have seen it. And in fact, it's gone backwards, as you know, from the latest data that was produced. I think we've all got to work at this and ensure that, we do get better gender diversity across not only at the CEO level, but, across the whole of organisations, because it will take the right balance that's actually going to, ensure that companies really do succeed, into the future. So very encouraging of all organisations to look at their gender makeup, as well as other diversity measures, of course, because it takes all of that diversity to produce, I think, the best results for a company.
Marnie Baker there, the CEO of the Bendigo and Adelaide Bank. Let's now take a look at JB Hi-Fi, which benefited from the pandemic. Shares in the company up 110% since the March low. Today, shares rose 3% on an increase in half-year sales by 24% to $4.9 billion, and it increased its interim dividend to $1.80 per share. For more on that, including the hardest products to get your hands on right now, I spoke earlier to its CEO, Richard Murray. Richard, sales hit $4.9 billion in the 6 months to December, up nearly 24%. To what extent are you still seeing that sort of growth in this new calendar year?
What we've seen over the last 12 months is, I guess, a number of different periods of sales growth. So we saw, the hibernation, then everyone was working from home, then sort of that settled down and people just were seeing that, that lockdown in Victoria where it was much more driven around home entertainment, fitness. There was a point where parents were doing anything to keep the kids amused in Victoria. And so we just saw, and then I guess post that, there's been that, Australians not travelling, and that just seems to have, there's a confidence in the economy. Property prices are staying well. Obviously, interest rates are low, and we've just seen that general strength across our portfolio that's been really pleasing.
And so to what extent is that strength still continuing in these first couple of months?
So in January, we saw sales across the group up 17%, which is really pleasing. So, we did have a few stock challenges in January that probably impacted those sales. We do seem to be able to just about sell anything we can get our hands on at the moment, which is fantastic. But we're working very hard as a team to make sure we deliver, secure that stock and deliver it for customers.
Those stock challenges, right? Is there anything that's coming up that consumers may potentially not be able to get their hands on as easily?
I think if you're a gamer and you're trying to get your hands on a gaming console at the moment, anything I say would be on those gaming forums in a heartbeat. So we wish we could get double the number of consoles we'd had, because people are pretty frustrated when, we have these once in 7 year releases. It's hard to get hold of the stock. The global supply chain has been under pressure for 12 months. It's not just in Australia, it's around the world. We're seeing it with our New Zealand business. Suppliers have been pumping out stock at elevated volumes for months. The supply chain literally is at full capacity. And then you add to it sometimes shipping or freight challenges, and there's not a lot of margin for error. So to be honest, I think we've done an amazing job landing the sales we have with the stock levels we've had. And I think that will continue to be a challenge for us, those stock levels over the next 6 months. But we've got the best team and we've got great relationships globally with suppliers. So I think if anybody's going to get the stock, we will.
To what extent are you seeing a shift to online sales, and is that kind of growth maintained?
It's a tough question, because while I want to say we've doubled our online sales and it's flying and it's going really well, I know that customers value the in-store experience. So, the reality is 85% of our customers still shop in store, and we sell more to customers in store. It's a higher quality sale. But what we recognise is sometimes customers are having a quick, less engaged shopping purchase, and often that's achieved online. And then when they're fitting out their new house and they want to go to a Good Guys and understand the home appliances they need for their new kitchens, that's often done better in store. So we need to delight our customers however they shop with us. There's no doubt when you're locked down at home, your online sales go through the roof. And when your Melbourne metropolitan stores are closed, 100% of those sales are online. But the reality is when we've seen WA and Queensland come out of those lockdowns, it's amazing how we have returned to an elevated number previous to the corresponding period. So, 6% becomes 10%. But that's up a lot, relatively speaking. But absolutely still 90% of our shoppers, 88% of our shoppers are still shopping in store.
Just finally, JobKeeper ends at the end of next month. Are you worried about the implications of that, both for your numbers and possibly implications on the economy?
I guess my job's to worry about a lot of things. The reality for the economy is it's in a much better shape today than we anticipated 12 months ago. So I think all the government policies, particularly the stimulus policies, have cushioned the blow for what could have been a pretty tough economic outcome for the community and the Australian economy. I think the economy is in great shape. So acknowledging stimulus coming off has to be a challenge. But the reality is, I think a consumer that's in the shape it's in at the moment, and a property market and an economy in great shape, is not a bad place to retail. And obviously with Australians not travelling at the moment, that has tended to be a good outcome for discretionary retailers. So I feel confident about the next 12 months, but certainly some of that economic stimulus coming off is something we're watching.
Richard Murray there, the CEO of JB Hi-Fi. To the Australian share market now, which hit a 5-day high, up 0.9% on the S&P ASX 200, 6868. Nearmap was the best performer, up 19% after it rebuked some short sellers. Zip also having a great day, up 17%. The worst performer on the 200 was software company Altium, down 4.8% on a decline in revenue. And Beach Energy also fell 4% on lower energy prices. Of the majors, BHP did well, up 2%. So too did most of the banks. The Commonwealth Bank was the only one to fall, but it only fell marginally. For more on the day's action, including the latest developments on Crown, I spoke earlier with Julia Lee from Burman Invest. Julia, the market is up today. Why?
We're seeing a strong day for the Aussie share market, up by 1%, and it is after Wall Street once again hit all-time record highs. We are seeing green across the board, with the exception of the utility sector and the property sector. And in fact, we're seeing record highs for a number of companies. We've seen Domino shares hitting above $100 as the lockdown boosts pizza sales, and we're seeing a number of other companies also hitting record highs today.
Okay, let's talk about Crown Resorts. Its CEO, Ken Barton, has resigned 6 days after that scathing report into its suitability to operate a Sydney casino licence. What took so long, Julia?
No doubt, trying to work out how to hand over the reins, not only in terms of the day-to-day operations, but the changes that need to occur. So the interim CEO will be Helen Coonan, who no doubt will be scrambling to try and find a new CEO as well as new directors to replace those that have resigned.
Yeah, so just how suitable do you think Helen Coonan is to oversee this huge turnaround project, and what needs to change?
I think she will be looking for a replacement to that interim CEO position as soon as possible. If we have a look at the running of Crown, it's not just about the day-to-day running of Crown, which is a huge job in itself. It's all about trying to turn around the company. And of course, a compliance expert is needed now, given the concerns around AUSTRAC and money laundering. So it's about really turning around the company, changing the culture, as well as having a strong compliance and audit background of someone to run the ship.
Profit reporting season continues today. Investors really like Bendigo and Adelaide Bank. Why?
We've seen Bendigo and Adelaide shoot the lights out. I mean, what's not to like in this result? Expenses are down, the net interest margin is up, lending is up. In fact, if you have a look at the area of residential lending, that was up 14%, which is more than 3.5 times what the market is growing at. Shares in Bendigo and Adelaide up more than 10% on the market, no doubt as short sellers scramble to close out their positions, given around about 5% of the stock was shorted.
Okay, what's this likely to mean for the other banks which report this week too?
Well, it's great news for income investors because earnings growth and the strength of the housing market means that dividends are back on the agenda. And later on in the week, we'll hear from both NAB as well as ANZ. Investors will be watching for that dividend as well as bad debts and the level of bad debts hopefully declining.
Okay, JB Hi-Fi is another one to report. To what extent did it benefit from the pandemic, and are those benefits continuing into the new year?
It's a record. JB Hi-Fi reported a record sales result for the half year. We did see sales soaring by more than 20%. Not only that, importantly, momentum continued into January with double-digit gains once again. I think as long as Australians are not travelling overseas, we are going to see JB Hi-Fi doing well out of the pandemic. The key is that when the borders and international travel reopens, well, how it's going to perform then.
And just finally, wrapping up, where do you see value right now in the market, given that we are approaching record levels very soon? And are there any areas of the market that interest you at the moment?
Ricardo, this is a year that the world is going to grow and recover. And if we have a look at how the world grows, it's by building bridges, by building buildings, by building infrastructure. And that's great news for the Australian share market, which is commodities heavy. I think the banking space will also do well because we haven't seen a housing crash. If anything, we've seen a housing melt up. So banks, building material companies, building companies should also do well this year.
That's Julia Lee there from Burman Invest. That is SBS On The Money for this Monday, the 15th of Feb. I'm Ricardo Gonçalves. You can follow me on Twitter and Instagram at Business Ricardo.
This On The Money stream is provided for informational purposes only. The content in this stream should not be understood as constituting advice or a recommendation. It's not personal advice and it doesn't consider your personal circumstances or objectives. You should contact a licensed professional before making any financial decision.